Yields are lower, stocks are higher, and the US dollar is lower. I'll talk about 3 of the major currency pairs in this video to kickstart your North American trading session. So let's get started. Looking at the Euro versus US dollar on the hourly chart, spreading it out, we are moving above the 100-day moving average, also moving above the 38.2% retracement. That's how this moved down from the mid-September high to the low price that we saw in November. The 38.2 comes in at 1.16405. We have been above it here. We've been above it through here. But each of the time the market moved above, it fell. Today we're extending a little bit higher, and we're heading up toward the high of this swing area. This swing area is defined by a number of different swing lows. First coming through here, forming this floor through here before the market then switched over to it being a ceiling, and then we have reestablished support here, moving higher before breaking to the downside here and 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 here. We've been using this level as a ceiling, going all the way back to this point right through here, which was back in the mid-October. So it's been a ceiling level, and here we are sitting at the high of this ceiling area right through here. And if we break above it, that would open the door for the 50% retracement. Traders work from point to point to point, target. And in trading yesterday, we moved down and we fell below the 100-hour moving average, but held support against this target down here. And that has started this rotation back to the upside. We have seen pretty steady buying since then. So the 50% retracement would be the next target if we're able to get above this level. Alternatively, if we start to move down, we have to get back below the 100-day moving average, 38.2% retracement. That's a nice double level that traders can lean against if the price were to stay above that level. If they have a bullish bias, then that is your risk-defining level for you as a trader. So be aware of that level near the 1.16405. Let's take a look at the dollar versus yen. And this currency pair moved up yesterday and got above the 100-hour moving average. That was a progress. Why? Because over here, the last times the market tested that 100-hour moving average, we found willing sellers. So getting above it was somewhat bullish. But as you can see, most of the trading yesterday was so up and down, especially during the New York session. We actually closed below that 100-hour moving average. And in an early Asian session today, we did find willing sellers against that moving average line. And that gave a little shove to the downside that got the price below this swing level right through here, which was again defined by a number of different swing lows and swing highs going back in time to just back here in mid-November, and the inability to do it too, and the ability, I guess, to stay below that level right here gave the buyers the confidence to push even further. Down here we have the next key target coming in near the 154.04 level. Let's call it 155.04 level. Let's call it 155. If we break below that level, we'll look toward the 38.2% retracement, which is where we stalled this rally off of this decline right through here in trading just 2 days ago. And so that level comes in at 154.62. So sellers trying to make a play here after buyers had their shot above the 100, couldn't stay above that level, couldn't get to the 200-hour moving average, so we moved back to the downside. Finally, let's take a look at the sterling versus US dollar. This currency pair is breaking to the highest level going back to this point right here, which is October, what is that? October 28th. And in the process, we're also getting about the 61.8% retracement of this move down from the October high to the low price that we saw in November. So getting above that level is somewhat positive. Next target, and this is now the risk-defining level. This is the risk-defining level just simply because of the fact that it was these two highs going back a week ago. So getting above that level is somewhat it is positive, and getting above the 61.8% is also positive. On the top side, though, we do have this 200-day moving average, which looms over here. We broke below that 200-day moving average back here at October 28th or thereabouts, and then came up to it and actually moved a little bit above it before rotating back to the downside right through here. So this 200-day moving average is going to be key barometer to get to and through. If the buyers are more serious, what it looks like on the daily chart is like this, and you can see that the break below that level was the first time below that level going back to this point right here, which is April, when we spent a couple of days below that level before moving to the upside, and before then back to March, when the market was more below that level to start off the new year. And getting above that level was positive. We did fall below it here before breaking to the upside. So getting above the 200-day moving average is key. And then right above that level, or within 40, 50 pips of it, 40 pips of it is the 100-day moving average of 1.33666. All these levels would be important to get to and through if the buyers would take more control. So there you have a look at three major currency pairs to kickstart your trading day. My name is Greg Wenglowski. Good fortune with your trading. Bye-bye now.